I think from my previous roles at Goldman and Balyasny, the two things that really stuck with me were the fact that both firms had incredible culture, which was really embedded within what they did and what they stood for. And that's definitely something that we're trying to ingrain here at Matador Investment Management. And the other thing was just the overall risk management. The best risk takers often had the best process, and within that, exceptionally strong risk management. And that's something that we think is exceptionally important in what we do. The main factor when setting up a hedge fund is to consider execution risk. For me, being based out of Dubai, quite frankly, it's a phenomenal quality of life. I'm very fortunate in that I have a great strategic partner that's provided me with great infrastructure, office space. I've been allowed to build out my team, have time to grow the business without the day-to-day stresses that I may have faced in London or New York, and hence have been essentially focused on putting up returns. So I think the opportunity set right now in macro in general is probably as high as it's been for the last 10 years. In currency space in particular, where we're obviously very focused and specialist, we think that given central banks, especially in developed markets, have taken rates to zero or negative, means that now the transmission mechanism to control financial conditions comes by the currency channel. Now, for someone like us that are tactically and opportunistically trading, we think there's a great opportunity set there. So our investment strategy is really focused around two main things. The first part is identifying dislocations, and to do that we utilize a lot of data and we codify my idea generation process to build a scanner that essentially helps us highlight where assets look cheap or rich. The second part of that is, obviously post doing the fundamental and macro work, is structuring trades in asymmetric and convex ways. What makes us a little bit different from other macro managers is just the duration of our holding period for trade. So we tend to trade anything from a few days out to 3 months, 95% of the time, and within that have a relatively high turnover of the book. So we're constantly looking for high idea velocity, trades with very high Sharpe ratios without any commitment. So if we don't like something, we'll cut it quickly. If we feel that the environment has changed, we can be very reactive and flip the book. Similarly, when we think there's a trending macro environment, we like to structure trades in ways that allow us to play that upside in complex ways.